Hi trader, this is Chris from Elite Currency with another video on the Fibonacci series. Now taking a look at Fibonacci and waves, a wonderful duo. Now before I dive into the topic, be aware that trading foreign exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. And this video is for educational and informational purposes only. By continuing watching this video, you agree with this disclaimer and you're aware of the risk involved when trading. Alright, so before we dive into the topic, be aware that there is an FX trading festival of webinars at Elite Currency up to the 4th of October. Send an email to info@ and then Elite Currency, you can see in the right upper corner how to spell that, .com, info@elitecurrency.com, and join the list to see the webinars. So, basically waves and fibs go very well together, and even if you're not a big wave fan, it is sometimes very useful to know more about that just to get a bit more accurate about placing the fibs. Now of course you don't have to be a big wave fan to use the fibs. You can put the fib on a candle on a natural swing high and that could work fine. But if you do have a bit of knowledge on the waves, then in certain conditions and certain ways you could even improve your Fibonacci skills. That's why within this Fibonacci series I want to talk about connecting the Fibonacci and waves. So of course, waves is one of those things that you'll never get 100% right, but isn't that actually with all trading? Trading is never a 100% thing. It's never that clear and cut and dry. It's always a bit of a probability, and waves are no different, in fact. That is just the nature of the market, and especially the Forex market. Not a single trade is ever going to be a guaranteed win or loss. And the same thing is with those wave counts too. It's probability basically. So it's all about assessing that probability. So, from that point of view, let's talk now a bit about the waves. Now wave 1, of course, is the start of a new trend. And how far does that go? Well, often enough I would target the previous swing. But it does depend. In this case, I actually have here in the bottom a screenshot where you can see the wave 4, purple here. And that actually is a very small wave. So if the wave is small, I would definitely not say that that is the target. But if you have a bigger wave, for instance, maybe the orange B to orange C, then you can put a fib from there to there, and then typically it would go deep to the 78.6. Wave 1 then stops at the previous resistance and corrects for wave 2, as you can see here as well. Wave 2, right, is retracing the wave 1, will typically go deep. Not always, but on an average goes deep, like the 61.8, 78.6, or the 88.6 fib. We'll retest all the way back to the bottom, like in this case, or of course to the top in a downtrend. So here price is already at the 50 fib in this example, and could stop here, but typically we go a bit deeper. In fact, that is on average what happens with wave 2s. Now what about the wave 3 target? When of course price bounces at the wave 2, we get the continuation of the wave 3. And here we see price often going to the minus 1618 target and higher. This is what we should expect. If price does not get that far, if it only goes to the minus 1618 target, right, minus 0.618, then most likely price is actually in an ABC. C is often equal to A. So if the third wave is not longer than the first wave, then it's probably an ABC and not a 1, 2, 3. That's a quick rule of thumb that you can use for your trading. If it exceeds a lot further, then it is probably at wave 3. Right? And in some cases it's clear, sometimes it isn't. And if you have to choose for a target, you can choose, for instance, to be conservative and aim for a 1-to-1. Or you can split the target, right, and make, for instance, part of the trade, close part of the trade at a 1-to-1 and leave part open if price does accelerate for wave 3. Now, the wave 4 retracement in this example here, you can see, typically goes to a 23.6 or a 38.2 fib. Max, I would say the 50 fib. That's not too typical. But if it goes below the 50 fib, then it's often not a wave 4 anymore. All right. So, shallow retracement like the 38.2 is most likely the most common Fibonacci retracement level, and you can see here indeed roughly stopping at that zone for the wave 5. And you can see the same screenshot continuing. In fact, look, it stopped right in between those two fibs. I think actually just missed the 38.2 fib by a few pips. And continues now up for wave 5. The wave 5 typically going to the minus 272 target or the minus 61.8. Or for instance, the 61.8 fib of the wave 1 and 3. put together. So those are typical wave 5 targets when using Fibonacci levels. Now, also good to place fibs are on impulsive corrections. Those are called ABCs. Those are still very good, actually, price action parts to trade because there's a lot of speed. And especially with an ABC, price makes a quick A, makes a retracement for B that often goes to the 38, 50, 61.8 fib, and then continues for more upward downside. And you can see here the B, when comparing to the A, well, that's roughly about halfway, isn't it? It's about a 50 fib. So you can see typical for an ABC correction is kind of a quick momentum correction and quick momentum against the trend. Those are still pretty interesting parts to trade. And the wave C target will often go to the minus 272 target or the minus 61.8 target. I will often keep an eye on the market. If it shows any signs of hesitation, I might take the market exit and not wait for the target to get hit, because there's no guarantee with a reversal trade that it will go all the way to the expected level. There's always a potential for the trend to continue after the ABC is finished, and I don't want to get stuck in a reversal trade when the trend is continuing. So I'm very cautious about that, but ultimately one of these two targets is the most common target for the correction like that. Now, there's also something called the WXY, which is a more of a corrective type of formations. You know, in this case, the fibs can be used, but maybe not as useful. Sometimes they are. If it's a very choppy correction, they're not so useful because price tends to retrace back to the top or bottom, not respecting those fibs. But in a triangle, for instance, an ABCDE or WXYXZ, when you have multiple corrections, triangle is more ABCDE, then indeed the fibs will be handy. Typically, in the contracting triangle, the price will respect the 61.8 or the 78.6 fibs as it makes lower highs and higher lows. So that's very typical for a contracting triangle. In an expanding wedge, it will actually break the top or break the bottom. Same with a running flat. It will typically break the top or bottom, and you will see price go up to the 138.2 fib. So it depends what type of correction. If it's a flat correction, fibs are not useful, and price will go back to the top or bottom, or even break the top and bottom, basically. In a contracting triangle, fibs are useful still, and also the zigzag, as I already explained. So that's just an introduction here of using fibs and waves. Take a look at this FX Trading Festival of webinars. Once again, sign up by sending an email to info@elitecurrency.com. And if you're curious about waves, by the way, take a look at admiralmarkets.com. Click on analysis, and you'll find my daily wave analysis there. So hope that you take a look and find that interesting. Thanks again for joining, and wish you good trading. Cheers.